War broke out, so why is gold crashing? Gold is down over $800 in just 21 days. That's more than a correction, that's a collapse in safe haven time. And it's happening during a time of global conflict, when by every historical precedent, it's supposed to be soaring. That's not normal. It's an alarm bell. And what it's signaling might be bigger than the war itself. For decades, gold has been the ultimate safe haven asset. When uncertainty rises, when markets get nervous, capital flows into precious metals like water finding a crack in a dam. War, instability, fear has almost always meant higher gold prices. It was a trade you did not have to think about. Instead of rising, gold is pulling back. Silver is getting hit even harder, down over 30% since the war started. At the exact moment physical demand should be spiking, the paper price is being driven in the opposite direction. This is not a market being nervous. This is a market being forced. There are three forces driving this, and they point to a deeper shift. First, the US dollar is being weaponized, and it still sits at the center of the global financial system as the world's primary reserve currency. In today's fractured environment, the dollar has not just become the primary safe haven, it's become the only place global institutions and central banks can move at scale. Because when capital moves at that level, it does not just need safety, it needs depth, it needs liquidity, and it needs a market large enough to absorb billions without breaking. And right now, only the US dollar system can do that. Second, real yields are still positive. Gold does not produce yield. When you can get a guaranteed 4 to 5% return on a risk-free treasury bill, the opportunity cost of holding gold becomes a crushing burden. And third, this is a liquidity event. When energy prices spike and uncertainty peaks, institutions don't buy gold. They sell their most liquid assets, including gold, to raise cash to cover margin calls and meet redemptions. It's the opposite of a safe haven move. So instead of capital flowing cleanly into gold, it's being vacuumed into the dollar, parked for yield, and liquidated for cash. But here's the thing about suppressed pressure. It does not disappear, it just waits. Because when something that should be happening is not, it usually means the market is not functioning the way we were told it would. And when the economic system breaks, that is when you find out what happens next.